So welcome everybody to Mortgages with Millennials by the Crispin commentary, which cut off in my logo. Graphic design is not my path, apparently. But presented by Form Free. And for those of you that haven't checked out Form Free, I would highly recommend you do. They're empowering smarter lending decisions. It's all about the borrower passport, which we've had Brent Chandler on before. He's the CEO, but the passport basically revolutionizes borrower pre-qualification. It collects their financial data, combines it with advanced cash flow intelligence, and allows lenders to perform efficient, low-cost pre-qualification analysis, which is just one cool step in kind of lowering origination costs and not spending money on borrowers that aren't ultimately going to close. So I highly advise you check out formfree.com for more. But let's turn to today's show. With me is my usual co-host, lovely Kristin Messerly. Kristin, I know we have our form-free background today, but where are you calling in from?
I'm in Los Angeles, but I heard you say 12:59 earlier. Where are you? Are you in New York?
I'm in New York City. I'm going to the Knicks game tonight.
Oh,
Go New York, go. Maybe they can close it out. Uh, and I guess Nick, we'll ask you where you're from. I met a guy in high school that looks exactly like you, so I assume you're from Atlanta because he was from Atlanta. But where
That's crazy. I'm from Augusta, Georgia, so
are
it's pretty
you?
close.
Okay.
Yeah.
oh,
Yeah, so
wow.
I may have been up in Atlanta when you first met me, Robbie, years ago.
You may
But
be that guy, pal. You may be that guy.
I may be that
So
guy. Maybe that guy.
yeah,
I was in high school like 4 years ago though, so it wasn't that long ago. So maybe there's a bit of a gap there, but who knows? Who
so
knows?
this is mortgages with two millennials and one Gen Z. Is that what we
No,
should?
no, I'm the last one, the last month of the millennials is what
Are
I've been.
you? Wow. Wow,
Oh,
wow, wow.
May 96 is the last month. So
So real quick, before we get into the meat of the show, and we have a lot of cool stuff to talk about for listeners today. Thank you everybody for joining so far. How would you explain the differences between millennials and Gen Z, broadly speaking? Because I heard from a Gen Z one time, she's like, look, millennials think the world is their oyster and they're depressed, like, oh, this should have been me. My friends are doing good things and I'm not. Meh. Versus Gen Z is kind of like, life sucks. Like, might as well, everybody's got to find a job, might as well work at Starbucks. And like, my Shein gives me happiness when it gets here. Like, I don't need to save that. Like, that's my impression. What's your impression of Gen Z versus millennial?
oh man, I have a test for Gen Z versus millennial that I use, and it's basically uh, do you share your location with all of your friends constantly, or not? If you do, you're Gen Z. If you don't, you're millennial. That I found that test has worked very well with a lot of people. But yeah, I don't share. I feel weird sharing my exact location with all of my friends at all times. But there's everyone who I've met who's, a few years younger than me who would qualify for Gen Z. They do. And that's the filter that I've used historically and it's worked. So it may not describe the exact differences, but that's a difference that I've noticed.
I
To
might
test
be
it.
an outlier, but I share my location with all my friends. But part of it is that I'm always late, and so they need to check my location to see if I'm coming, if I've left my house or not.
Love it.
Do you have thoughts on differences between millennials and Gen Z? Nick and I both kind of gave ours.
Yeah, I guess what we've seen in some of the research is that, or at least like what I've been looking at, I've been surveying millennials and Gen Z for a while, for several years, and Gen Z are, of course, more likely to turn to social media and AI for, home buying information. They've historically been seen as more financially conservative, although I'm curious to see how that plays out over time. They're more open to collaborative living. But again, millennials were also kind of at the sphere of that whenever a few years ago. So I think, a lot of it is the idea of like tech driven, more, I don't know, some of the stuff that you were saying, Robbie, definitely aligned with what we've seen too. So yeah, lots of details that I could share in the research, but that's what we're seeing.
Well, we will get into some research today. Nick, I kind of want you to introduce yourself because I found some
Sure.
bios on the internet. I don't know what's fully up to date here. You're from Augusta. Maybe you live in Denver now. You lead HomeShip's financial product buy before you sell. You also are entrepreneurial. You co-founded Accept Inc., where you served as COO and CRO. You said on here you graduated high school 4 years ago. I think maybe you meant college. Give the people the truth.
Yeah, I was just joking because
Oh,
everyone
okay.
Everyone calls me a lot younger than I am, but yeah. I'll give you a quick background. So again, born in Augusta, Georgia, raised there. I have been to the Masters multiple times and met a lot of awesome people there. Super fun growing up in that area. Moved up to the Northeast, went to college for a couple years. Found out that college wasn't for me. Dropped out and started a company instead. So I started a company called Accept Inc. in the real estate space. Basically spent 2 years failing absolutely miserably. Almost packed up our bags at the end of those 2 years. But then we did get into Y Combinator and we went out to Silicon Valley, raised money, built a team, all that good stuff. Basically, Accept Inc. The short part of it is we were the institutional rich uncle or rich aunt to millennials. A lot of millennials were they're our key buyers, first time home buyers, basically who were competing against people who were coming in all cash, and so we'd provide them with the cash they need to be a cash buyer in the market and beat out other offers. So that was Accept. And then Accept we sold to HomeLight in 2022. And so I've been at HomeLight ever since then for the last about 3 years. And I run our flagship product, Buy Before You Sell. I'm the president of homes here at HomeLight. I've been doing that for the last 3 years, just trying to grow the product as big as we can.
That's very cool. I was prepared to talk about this lender insight survey all day today, but uh, seeing as you run this buy before you sell product, maybe you can speak a little more. And Kristen and I have had episodes on this before, but just kind of the home hacking or different ways that the younger generation or people in general can kind of maneuver their way, finagle the bagel, if you will, into the American dream, or building generational wealth, those sort of things. And the buy before you sell is an integral part of that. We're seeing that among a lot of different companies offering a product like that.
Absolutely, absolutely. And it's, the simple way to think about it is I have an existing property and I have equity in that property and I need to take it out in order to buy my next house, right? How do I do that? What's the easiest way to do that? And so we basically help clients go buy their next home, be able to afford that next home without counting their existing mortgage payment towards their affordability. And then being able to take money out of their existing house as well to buy that next house, live in it, and then list their existing home staged and vacant, sell it for more money, and basically end up net positive from the entire transaction, instead of losing money by moving in with your in-laws for 4 weeks while you wait for your new home to get done or whatever it might be. This is kind of the simplest, most convenient way to transact in real estate, and a lot of these products are super interesting and are helping people kind of achieve that reality in today's market.
This is really exciting to me. I feel like we're at a point where, I don't know, we're seeing new products and new ways of buying homes that that if we had more awareness around it, there'd be a whole lot more millennials entering the marketplace, and I think this is a good example. When one of the data points we saw in our most recent survey was that only 19% think now is a good time to buy a home. And of course that makes sense. But I think for people, if they had understood that there's things like this available to them, it would really change the way that they approached that or thought that what was accessible to them.
Absolutely, absolutely. And it's I think there's this idea of, there's people who need to buy and need to move. And those people are the ones who end up finding these solutions because they're searching for anything they can find. But if you're not actively needing to move, right? If you're just kind of like, hey, I'm interested in potentially buying another house, oftentimes these solutions don't make it to those people, and they end up sitting on the sidelines for a lot longer than maybe they needed to.
I bring what both you said together there. How can we engender awareness amongst younger people about these products that exist? Obviously, the three of us, our friends, probably reach out to us because we're the mortgage or finance people in their lives. But even then, I'm not thinking, hey, how about a buy before you sell product? It's more like, hey, should you time the market, or what do you think of it? Where interest rates going to go from here? Kristen, let's start with you, then let's go Nick. How do we get more awareness of products into younger people's consciousness?
I mean, we have to look at where people are getting their information in general. And I mean, 40% of Gen Z go to social media, 30% of millennials. That needs to be part of the standard, not just like putting stuff out there, but partnering with influencers and local leaders in their communities. But I do think that like having specific conversations around this, and rather than like just general home buying education, is super important, because I know for my friends, they don't know about this kind of stuff until I actually specifically tell them, hey, there's this opportunity, like the crib equity conversation, around co-investment type of models, and nobody knows about that. And so I think we need to find more ways to be able to empower people to look at the variety of options available to them. And even like, some of we see people more open to fixer-uppers, and but they don't know what goes into that. So even getting really specific around, like, if you want to go this route, here's exactly what you're going to do. But yeah, I'm curious, Nick, what your thoughts are around that.
Yeah, the way I think about it is, these companies that are offering these products are typically they're startups, right? They're smaller products, smaller companies who are offering this. And I think that there's only so much that we can market this product with our own money and our own, resources, right? And so the way I think about it is, if you can empower loan officers with these types of products, or real estate agents with these types of products, and get them singing about it all over social media or wherever their platforms are, they can spread this for us, right? There's 99,000 active loan officers, probably more than that, and a lot more agents out there in the world. And once they use this product once or twice, it becomes a very powerful tool for them in their business. And a lot of people follow them, right? And so instead of trying to create, a social media following within these smaller companies that are trying to get these products out there, I think you have to empower people who already have those followings to really just help grow the product. And that's the way that we've approached it, and a lot of these companies are approaching it today.
Totally. One more thing I would add is, of course, with First Home IQ, our nonprofit, we are going to schools and organizations to deliver home buying education. And I think if we can talk earlier on in the like before someone is even buying a home, about the different ways that you can afford to buy a home, it would open the door, because people don't even know about anything outside of traditional financing for the most part, or even down payment assistance or anything like that. And so if you can understand that there's a lot of different things, you don't need to know exactly what that looks like, but be walking through those scenarios even in college or whatever. I think that could really change how people are approaching conversations with loan officers and industry professionals.
Absolutely.
Nick, where's your marketing spend? If you don't have to go deep into it, but how are you getting the word out? What are the ways, in a practical sense, you're going about it?
Yeah, the marketing spend, again, on our end, is really just focusing on lenders and loan officers to start, and then agents from there, right? And so the way that we think about it is, if we can go to the top lenders in the country, offer this product to them fully white labeled, right? It's their product. It's going to sell a lot better, right? If I'm a consumer and I'm starting the home buying journey, and let's say I'm talking to a loan officer at ABC Mortgage Company, right? And I get their trust, and I'm like, hey, I'm going to work with this ABC Mortgage Company lender, and all of a sudden a third party, HomeLight, enters the conversation with this other product. It's like, well, wait a second, I'm working with you, I'm also working with this other company. It's too much, right? And so what we've done is we've really focused on white labeling the product and saying, hey, this is ABC Mortgage's product, right? And I trust the loan officer working at ABC Mortgage, and therefore I'm going to utilize this product, and I understand it a lot better. I think that's been the way that we've kind of approached it, is, can we use industry experts, use the people who gain the trust, who their entire job is to gain the trust of consumers, to help us spread the product. And that's what's worked best for us. And so we've taken that approach, at least to date.
But you trust ABC Mortgage's marketing department to properly get the word out? I would think,
Yeah.
if I wasn't intimately involved in the mortgage industry, I wouldn't even know a buy before you sell product existed. And so I'm wondering how we get, like Kristin said, kind of into people's, consciousness, like earlier and earlier and earlier, before they would even think about looking to buy a new home. How are you advising your clients on that?
Yeah, absolutely. And again, it's through the same channel, and oftentimes a lot of that marketing material, right, is provided by us, right? So we're doing all that work behind the scenes. But what we've realized is that loan officers are using this as a tool, not only to get clients, but also to get agents earlier on in the process. So it's, hey, you should talk to me because I have a breadth of products that I can offer as a loan officer, and I can help any of your clients, agent, in any situation, right? And before they even, go to the agent and say, hey, do you have anybody who fits this scenario? That's the first conversation. It's a reason to reach out that's different. It's not, hey, I offer good rates and good service. That's what it's been for a very long time. Now it's, I offer good rates and good service, but I also offer this really unique product that can help a variety of your clients who are sitting on the sidelines right now, right? And that's the pitch, and that's the approach, and that's what we encourage our loan officers to do. And that's again how we've kind of grown this as well. And we do direct marketing as well. So that's not, it's also happening. But the most effective is when you have these loan officers out there in the world kind of pitching it for you.
I'm curious if you have run into any challenges around the lack of trust in industry professionals and specifically loan officers. Like one of the data points that came back on our recent survey was that only 20% trust loan officers, of millennials trust loan officers, help them make smart decisions about their mortgage. And I would imagine adding a product like this builds trust, but I think that that's, of course, they're going to have their existing people that their database that they have already built trust with. But is there anything on top of that that you're finding is either a challenge or opportunity to help them build trust in a community where there's a lot of distrust?
Yeah, I think the biggest challenge there is, again, it's everyone is pitching the same exact thing. And so it's really hard to trust people who are just saying like, yes, come to me because my service is better, my rates are better, and I'm going to get you the best deal. Right? When you're pitching the best deal, you're never going to win. There's always someone else with a better deal. And it makes you look really bad as a loan officer a lot of times, right? So if I'm a client and I say, hey, I'm going to get a $2,000 a month mortgage payment, and someone else comes up and says, well, I got you 1950, and you say, well, you said it's the lowest rate in the country, right? That you can't claim those things. But what you can talk about, and again, I encourage loan officers to do this all the time, is talk about actual solutions that will help the client in their specific situation, right? Most clients, it's not like 2020 anymore, where clients can drop in and buy a home at 3% interest rate, and have their choice of whatever home they want. It's not like that anymore. And so finding these solutions, talking to these solutions, helps millennials, clients, buyers understand that these loan officers know what they're talking about, right? And that's what I find to be important in building trust.
So Nick, much like Kristin, you've also done a fair bit of research or surveys out there, and I was originally hooked up with you through the Lender Insights report that
Yep.
HomeLight puts out. And actually, here, maybe I should put a link in the chat to the 2025. Here we go. Let's do that. But there's a ton of interesting takeaways, and I should say that's the first message in the chat today. People, feel free to chime in with questions or comments. We love an interactive chat. You can say hello. Hi to our usual people I see out there. Nice to see some familiar names in chat. But anyways, Nick, this 2025 Lender Insights, and I guess there were predictions with it as well. It was for the first quarter of this year. It compiled the findings of a survey of over 55 top lending companies across the U.S. There were some big players in there: the Loan Store, Fairway Independent Mortgage, Lower, some others. But before I get into stats or anything specific, kind of big takeaways from the report or trends we're seeing in general that you think are worth sharing with people.
Yeah, I think the biggest takeaway is that people are tired of waiting to buy homes right now, and it was kind of shocking to see how many millennials, in particular, first-time home buyers and second-time home buyers, are just finding ways to make it work. Right? They're starting to understand that the higher costs and the higher rates are here to stay for a bit, and they just have to deal with it and figure out a way to buy homes. So I thought that was really interesting. I also thought what was interesting is just the amount of people that are turning to non-QM products, that are turning to multi-generational housing, where they're living with their parents. They're renting out ADUs in the back to help make the mortgage work, right? There's a lot of, I think, unique things that people are doing now that they weren't doing years ago. And I think the way that I kind of summarize all of it is, if I'm a buyer in 2020 or 2021, and I go and buy a home with a $400,000 loan at 3%, I'm probably paying about $2,000 a month. All of a sudden that same home is 3,000. It's 50% increase, right? And not only that, cost of living is increased, right? And my wages certainly haven't increased by that much, right? So now I'm trying to find ways to get into a home. Maybe I do a rate buy down. Maybe I put more money down. Maybe again I'm renting out portions of my home. There's ways that you can kind of maintain the same level of payment, despite the fact that rates and costs have gone up. And that's what I've seen so many people are doing, and that's what we saw in this report as well. Is loan officers are seeing a lot more buyers willing to take on bigger risks, and willing to use more unique products.
Yeah, I'm going to share my screen real quick. Actually, I can't share my screen.
There you go.
Okay, it's so relevant. I wanted to share this one slide from just this survey a couple months ago, where we're seeing, and of course, more Gen Z are, I think, more open-minded and also not thinking about homeownership in quite the traditional way, but we see co-buying with friends and family, renting out a portion of home, buying a fixer-upper, moving to a lower cost area, just more interest in making things work, like you said, Nick. And I would love to even expand outside of this to some of the other areas you've talked about and have people really think through and even maybe build some more comprehensive calculators, because I think that there's so for consumers, we need to personalize that and really be able to see how that affects every, your individual situation. Nick, are you seeing much? And I don't know if this came up in the survey, but how AI is transforming buyer, relationships or views on education?
Absolutely. I think that one of the things that we're seeing is loan officers are often scared that AI is taking over their jobs, right? Which I don't think will happen. Like I don't believe in that, right? But what I tell them as well is use that back for the consumer and give them the education that they need via AI tools. And I think the AI comes at least in the approval process, right? So if I'm a client and I'm looking at all these different options, I'm very easily overwhelmed. Right. And so actually making a decision as to, hey, what is the best for me? Maybe I'm most concerned about finance. Maybe I'm most concerned about, just convenience of a move, right? Whatever it might be. If I can tell, some system, hey, this is what I'm looking for and this is what I want to do, and it can provide to me a solution, that's a really great use case. Another great use case is non-QM mortgages today take 5 or 6 days to underwrite. They're very complicated, right? You need a lot of tax returns and information, documents from clients, right? And it gets very, very complicated over time. And so I think one really interesting use case is how do we shorten that timeline from 6 days to immediate? How do we underwrite a client immediately for a non-QM product? And I think that those two things, the education and the actual speed of approval, will really help consumers. And it will also go back to that point about trust. Hey, you should trust me because I'm able to help guide you to the best solution based on your needs, and I can do it quickly. Right. And those two things I think are what AI can be used for the best, I think, in today's market.
Yeah, the discussions I'm having with people on my daily podcasts that I do surrounding AI are like a lot of the vanilla underwrites or vanilla files. We should be able to breeze through those, which should free people up for these more complicated things that are or more complicated files or whatever it might be out there. The human element's not going away. I think all three of us can agree on that. And Chris and I have talked about this at length, where when we got our mortgages, we're in the industry and we were still overwhelmed to like, what product do I choose? Do I do buy down points? What should I time it a certain way? Should I lock now? Like all that stuff. And so you can only imagine what it's like for somebody that isn't well versed in mortgage or which is the vast majority of Americans out there. Oh, you mentioned one thing though, Nick, and that was about taking risks. And I want to hone in on what do we mean by risks? It's not like companies are going to lend to extremely high DTIs or something like that. But how do you mean that word?
Yeah, yeah. I was speaking more in that sense to kind of the fixer uppers, right? So people are saying, hey, I'm gonna go in, I'm gonna purchase this home, which I can afford. It's a lower priced home, and I'm going to spend time fixing it up to the best of my ability, right? I see a lot of people who come in and they have no idea what they're doing, right? And they say, hey, I'm gonna buy a fixer upper and I'm gonna figure it out, right? Or hey, I'm gonna buy one, I'm gonna fix it, and then I'm just gonna rent it for a while, and I'm gonna keep renting, and then I'm gonna wait until I have enough income to where I can go buy my next house, right? Or enough assets to where I can buy my next house. So I think those are the types of risks that I would say. The other thing is living with other people sooner. Right. I have a lot of friends who are moving in with their significant other, with a house, buying a house with them very quickly, right? Very early in the relationship.
Hey, you were in the green room with us when Chris and I were talking about our relationship woes. We're not going to go to the survey with when it came to risk. I think you'd also mentioned unconventional financing, and so
Yeah.
I'm wondering what that means. One, and then two, why you would lump unconventional financing into the risk category.
Yeah, yeah, I think so. Unconventional financing simply just means that it's not a traditional Fannie Freddie 30-year fixed, right? So non-QM loans, self-employed borrowers, people trying to figure out a way to use crypto assets or bank statements or whatever it is. And so I wouldn't say that's really once they're underwritten and once there's actually a product for them, it's not necessarily more risk. I would say that there's some refinance risk on some of those products. It's like, hey, I'm gonna go in right now at this rate and this cost, and maybe I can't get refinanced in the future because it's such a unique product. I've heard that before. But beyond that, I wouldn't necessarily loop that into risk for the client. I think there are definitely some lenders out there taking risks on some of those products, and they've created their own kind of in-house portfolio products in order to get consumers in the door. So I'd say that's more so on the lending side. But on the client side, again, I think the risk is, I'm stretching my affordability still a bit, right? Even if I'm at the top of my DTI, it is still stretching affordability quite a bit. And it's a lot more than I was used to, maybe again, 4 or 5 years ago.
It's interesting with the social media lifestyle where you see somebody else doing, driving off in a Mercedes or something like that. And you're like, oh, I want that. This Zillow, pardon my language here, but house porn almost, where it's like, well, if I bump up my price range by another 100 grand or 200 grand, look at how much cooler of a house I can get. So it's kind of cool to hear you say people are more willing to get back into fixer uppers or just something that they can get into, and they realize, hey, I can make this better, or maybe I'll have a chance to refinance throughout this market cycle. I mean, but you're alluding to kind of a bigger trend that we're seeing here. If we're seeing a decline in traditional mortgage applications, do you think millennials, young people, are we rethinking the mortgage process or the way it should be done, or how do you see it transforming based on customer needs or preferences?
Yeah, I think we're definitely rethinking it, right? I think we're not viewing home buying as I want to buy this house because it looks great and I love it and that's where I want to live for the rest of my life, right? We're not viewing it that way, and I don't think we have historically. But we have a little bit more, right? I think when I bought my house, I was super excited about the house itself, and I was thinking less about the long-term investment of the property, right? I think now you really have to think about not only the long-term investment of that property, but also, are taxes going to be really high? Are they going to go up over time? Am I in an area that can be flooded? Am I in an area where insurance premiums can go up? Right. There's a lot of things that you have to think about now that you maybe weren't thinking about as much when homes were more affordable, right? And so I think that's kind of the rethinking of the mortgage process that millennials are going through today is, hey, I need to think about this as a longer investment. Or if I'm going to fix it and flip it quickly, is this the right market to do it? And so I think people are taking a lot longer. We see it in our applications as well. When people come to us and they're looking to buy a new home, even a few years ago, right, they were ready to go. They would buy the next weekend. The second they put in a mortgage application, they're ready to buy or the next weekend. Now it's taking, weeks, if not months, for them to make a decision on which home is best for them. And so I think that is very interesting as well, to see in the market.
I think there's also just generally more anxiety, not just about whether it's the right time to buy or they're, the right home, but and they have more space to have that anxiety. Before there was like a lot of pressure, but I think, but in general, I mean, Robbie mentioned even we were anxious as we were making that decision, but I saw something in your survey around, let's see, I made a note, with 36% of clients expressing anxiety about long-term property taxes and fees. There was also something about homeowners insurance going up. And I think there's some more awareness that homeownership isn't just a fixed cost like we talked about in years past, but there are rising costs that we need to be aware of. Is that something that you think has added to the like hesitancy, I guess, to jump into homeownership?
I think it absolutely has, right? Especially when people are at the top of their ranges for what they're looking to purchase, right? Back about the same example, hey, it's $2,000 a month for me to buy this house. Goes up to 2,200 over the next 3 years, whatever, right? That's fine. It's an extra $200 a month. I can handle it, right? But when you're at 3,000, you're already stretching. That $200 a month added is a huge difference, right? You're really getting to the top of your range, and so I think it's something that is much more talked about now. I think there are, really, really strong loan officers who are actually going through that with their customers, and building the trust with them and saying, hey, this is what it might look like a few years from now. And they're not just trying to make the sale; they're very transparent, right? Which I love, and that's what millennials want. I think people, who just try to do it for the sale and ignore it, right? Oftentimes they get stuck in these homes where there are rising costs they didn't know about, and so it's really important that we keep educating millennial home buyers that, hey, this is not going to be your mortgage payment forever. It's going to go up. The tax and insurance will go up likely, depending on the market that you're in, as far as the size that it will, right?
And I think when that's personalized and they know that information or they can expect certain, raises like that solves some of the anxiety, and I think that allows people to move forward with confidence. And this lack of confidence is a huge barrier to people actually making the decision to move forward.
Absolutely, absolutely.
Yeah, the thought would be, Nick, it doesn't have to be your forever home. Just get into a home and then you can and I think that people are starting to understand that at the very least. Uh, Even if there are kind of these qualitative factors of, well, I put work into it. I don't want to separate with it. It's like, this is just a steps to get you to the next step, to the next step. Do you look like you
Yeah,
want to say?
yeah. I think no, I was gonna say I think that's the case in some cases. I think other people are nervous they're gonna be stuck in that home for a long
Mhm.
time. Right. And so you have both sides, or you have people who are like, hey, that's the optimistic view. Hey, yeah, this is my starter home. I'm just gonna jump in. I'm gonna, get it going, and then I'm gonna be able to springboard into others. You have other people who are like, if I get stuck with this thing, right, I need to make sure that I can afford it long term. And so I do think I'm seeing both sides pretty consistently. It's about 50-50 as far as what I've seen. And the pessimistic view is starting to gain a little bit more traction as well, which is unfortunate.
Well, if we have any math whizzes in the chat, please correct me if I'm wrong in saying this, but if my mortgage interest rate's 7% and the house is appreciating at 7%, it's not like it's a great financial benefit to me over the long term based on the interest I'm paying. Because you would think over the life of that loan, I'm basically paying as much in interest as it would appreciate, sort of thing. Maybe I'm wrong, math people, correct me out there. Who knows? Nick, I did want to ask you though, when it comes to these higher rates, when it comes to redefining what affordability means, have we redefined it, or is it just kind of this resignation in people's minds of like, I'm screwed. We're in, I'm not going to get a 3% rate like my friends did. And, where are we with psychology?
Yeah, I don't think it's resignation. I think that everyone, at least that I speak to, still believes that rates will go back down. Maybe not to 3%, but significantly enough, right? To the point where I think that people will be able to refinance and get, much better monthly payments. So yeah, I think that will happen. I think millennials believe that will happen. And so I think people who are buying now oftentimes are thinking about, hey, I'm going to be able to refinance this down the line. At least that's the loan officer message that they're giving out to so many of their clients is, hey, don't worry, you can refinance down the line, just get the house that you want, right? And so again, I don't think it's resignation. I think it's just a reframing of how we're thinking about the immediate investment versus the long term payments.
Kristen, how did you think about it on a personal level when you were buying a house? And I can go after you, but in regard to what Nick just said.
So I think that, well, one thing I was going to mention is just that in the survey, 95% of people still said that they wanted to own a home, but 35% said that it felt like a dream, like it was just a dream kind of thing. So I think there is this feeling of like, did I miss the boat? Is it out of reach? Whatever. But yeah, I think for me, I was very much nervous that this was going to be a bad decision for me. And yet I was even in a really good time to buy. So that was like when rates are really low and, so yeah, I think there's general anxiety that even regardless of where the market's at. Robbie, what?
I think there's FOMO, and I was thinking about how I was going to respond. I didn't even know my answer before I asked you that question, but not, in thinking about it as you were talking, I think it's FOMO on both sides. I think the grass is always greener. I bought a house, you bought a house. I'm like, uh, my property, my taxes went up, my insurance went up. Look at all these remodel costs. Look at all the just fixing things costs in general that I have to do. I'm like, renting was pretty sweet. My dishwasher breaks. I call my landlord. Somebody comes and fixes it. Now I'm on the hook for this. My mortgage payments rising. You know, there's a lot of this like I had it pretty good. For the people that are renting, they're all like, I want to own a home. I want to own a home. And so it's this almost cross pollution of you just want what you don't have. And sure, you and I could get rid of our houses, but go ahead, Kristen.
Well, I do think this cost of waiting, it would be something that would be helpful for people to help them think about home ownership. Because when I do those calculations for people, it really is beneficial to own a home at least over a longer period of time and to continue, even if that means scaling up. And I think that we don't see those numbers, especially as they are calculated for our specific situation. Not to say that it's always a good idea to own a home, but I do think many times looking at the analysis changes how you think about it.
Nick, we're monopolizing this conversation. Do you own and do you have thoughts on?
I do, yeah, I do own it. I think that same thing. I bought when it was 3%, and it was great. And I think that same thing. My cost has gone up over time on that house as well. And I think that I wouldn't have done it differently necessarily, right? So I think that, and again, I still believe that home ownership is better. And even at the 7% rate, even what we're seeing now, right? A lot of times it just makes a lot more sense to do it because of just the long-term impact. So I agree on all those points. I think that the general sentiment though is changing a little bit, right? You do see quite a few people who are renting in really nice communities, so they have their fitness center and their pool, and they don't have to worry about doing any maintenance, right? And they talk to their friends who own, who are saying, hey, yeah, I just spent 10 grand on a roof replacement because of XYZ just happened, right? It doesn't necessarily sound great, right? It's not the same level of, oh my gosh, I'm so happy that I own this house for my family. It's not that anymore, right? And so I do think there's a bit of a tension still. So I would say that not all renters are thinking, hey, I really need to jump into this. It's really, again, people who need to move right now, people who need to get out of their existing situation, whether it's they need to move to a new place for a job or whatever it is, and they're used to owning. Those are the types of people who we're seeing, at least, who are purchasing quickly. Everyone else, again, they are taking more risks. They're jumping into it because they want to, because it clicks for them. The math clicks for them that, hey, this is a good investment. But the lifestyle is not necessarily what's clicking for them, right? It's not, hey, I really want to have an asset that I own that I have to maintain at all times, right? When you could, have your pool and your gym and your, cabanas and not have to, not have to worry as much, right? So I think there's definitely still a bit more of a divide there now than there has been before.
I mean, you bring up worry. Kristin brings up distrust. Nick, I'll ask you to answer this first and Kristin after. But when it comes to helping millennial buyers make more confident decisions, how can the lender do it or the originator do it? What are the best ways, Nick, in your opinion, to instill confidence and trust and faith in potential borrowers out there?
Yeah, honestly, I think it's showing them the numbers and explaining exactly both situations to them. Hey, what are all the things you're thinking about doing? Well, I'm thinking about either renting, I'm thinking about, buying, or I'm thinking about, maybe buying and renting a portion of my home, an ADU, right? Here are the three options, right? And I think if as a loan officer, I would say, okay, here's all of the three columns, right? Here's the benefits of each. Here's what it's going to look like 5 years from now, right? Here's how much you would have spent in rent versus how much equity you would have built in your house, right? And actually just showing that to the customer. And if the rental situation actually turns out to be the best one in some scenario, the loan officer saying, hey, if I were you, don't work with me. I don't need to make money off this. Go ahead and move forward with the rental situation. Oftentimes, very, very rarely will that be the case. But if it is, I think that's the trust instilling conversation, which is you don't necessarily have to do something that's going to make me as the loan officer money. I just want to make sure that you get and you do whatever's best for you and whatever you prefer. And I think that's how you can instill that trust in consumers. And it also will help, steer them towards a conversation of, hey, how do I actually, find a solution towards buying, right? Because I'm going to trust that loan officer a lot more if they're not telling me, hey, just go the traditional path and do what I think is best and what I've been telling my clients for years, right? So that's the way that I think, we have to lay it out. And that's what millennials appreciate, right? We appreciate seeing, here are our options and, recommending something that maybe is not, the most expensive item on the menu being the favorite item for the waiter or whatever, right? That I think is really beneficial.
Absolutely. Yeah, I think transparency and that personalization are the most important things when you're thinking about building trust with borrowers today. And even for me, when I was buying, it wasn't until I really looked at the rent versus own, and I got a mortgage coach total cost analysis when I was doing the review of options, that I was able to build both of those built so much confidence, because then I was able to see, okay, yeah, if I put this much money in the stock market versus doing this is what that looks like. And I feel like borrowers have to see for themselves what their situation looks like over a period of time, just like you said, Nick. So.
Yeah, there's some stat that came out recently. I think it's like 49 of the 50 most populous metros in America. It's cheaper to rent than it is to buy. So yeah, that discussion's changing. I actually talked to an LO last week who I really respect, and she said, I'm telling clients right now, you might not get a chance to refinance. Let's see what you can afford. And there has been a change in borrower preferences. And I alluded to the social media lifestyle, but it's also, she used the examples of, we didn't used to Uber Eats 4 or 5 times a week. Now we look how expensive that is versus cooking. We didn't used to get cars with all these bells and whistles, and now the cars have to come with all these features and that sort of thing. Like, people's lifestyle preferences have grown. And so it's nice in a way if you're a trusted advisor, kind of reset people back to what's the payment? Forget the rate. We're done talking about rate. What's the payment? What can you actually afford? Hey, the insurance is probably going to go up. The taxes are probably going to go up. Let's talk about what you can afford over the longer term too. And I know from personal experience, when I hate to keep alluding to the other podcasts to do, but my daily podcast, when it's a salesy interview, a paid interview, people know like that. When it's a subject matter expertise interview, people are dialed in and they seem to like it a lot more. The same goes when you're selling a client. And I hate to even use the word selling. When you're working with a client or advising a client, people pick up on being pushed into something versus people pick up on, hey, this person is just trying to educate me or does have my best interests at heart. And I think that the younger generations have a pretty good BS meter when it comes to these things. And yeah, Kristin, sorry,
And they're even more over the top about it. Like, even if they are like even for me, I was like, I trust you as a person. I like you as a person, but I also know you're paid to tell me that it's a good idea to buy a home, So I think you have to go the extra mile to just say, hey, like, to show those pros and cons, and to show absolutely investment over time, but also set expectations over costs over time, all of that.
Yeah, we question everything, right? I think that, as someone who's owned and ran a mortgage company before, right? When I would get a client who's millennial home buyer and I would talk to them, it would take an hour and a half to get off the phone because they would ask so many questions. And that's what we do, right? We need to know every single thing. We need to break down every layers, and we don't trust. That's our first thought is we do not trust, especially for people who are selling us something and we know they're getting paid to sell it. We don't trust when it starts. And so it really does take some time to kind of break that down.
Kristin, I know you have some big news that I want you to break at the end of the show here in terms of a partnership, but I have one more question for Nick before we get to that. Uh, Nick, we have this buy before you sell, which can be viewed kind of like a bridge product in a way. There's a lot of people tapping into home equity and saying, cool, I can get a rate in the single digits versus my auto loan might be in the teens versus my credit cards are in the 20s or maybe even 30s. What other products are you seeing out there kind of rise in popularity or demand?
Yeah, I think, again, that anything to do around home equity has been rising. I think that there's a lot of people who are currently own, who are looking to get as much equity out as possible and not actually pay any interest. So there are companies out there who do kind of shared appreciation, right? Where you can borrow money from your house now, and in the future when you sell, they keep some percentage of the appreciation, right, in repayment. So there's things like that are out there that I've seen start to grow in popular. Unison, companies like that. I think just any sort of HELOC related product right now, and this is not even to do with home buying, it's home ownership, right? If I own and I've decided to take on a bit of a stretch of a lifestyle, right? And I've realized, wait a second, I need to get money from somewhere else. The home is the best piggy bank right now, and there's so much appreciation and so much equity out there. I think equity's in an all-time high. It's like 11 trillion plus or something like that, some ridiculous number, right? And so I think that people are really looking to those products as a really big source to either consolidate or have money for a major expense, or just have money for their daily lives right now, which is tough to say, but it's true, and that's what's happening right now.
Kristin, I alluded to it. Am I
Yeah,
breaking
it's a good
target?
segue, actually.
Okay. Oh, go. Floor's
So,
yours.
yeah, I'll just mention real quickly, it'll be announced tomorrow, but First Home IQ, nonprofit focused on financial literacy for the next generation. We have partnered with Crib Equity, which we did an interview with them a few times ago. So you can watch that on the Mortgages with or Chrisman News YouTube. But we've partnered with them to deliver homeownership education alongside their co-investment model. So you can, this is for both lenders to access as well as for consumers, just to make down payment more accessible. And if you go to cribequity.com/firsthomeIQ, you can learn a little bit more about it. We have a quick interview on that and some calculations here. So it just kind of goes again to support some of the conversation around expanding product options and making homeownership more affordable. So excited about that.
Very exciting. Yeah, we're gonna have some news in the Kristin commentary daily email tomorrow about it. Nick, any final thoughts here?
I would just say that I think I think it's one of the most interesting markets to be a part of, I would say, that we've seen, especially the speed at which it's changed over the last 4 or 5 years. And so I would say, again, like, take advantage of all of the products out there. There are so many more than you even think. ChatGPT is a great resource, right? Hey, just type in your scenario what you're looking for, and it'll help you kind of at least explore a bunch of different things that are out there today. But I would say, again, like, if it makes sense to buy, find a way to buy. That's what a lot of people are doing right now. And I think that still makes sense to me. I'm looking to buy personally, despite the rates, despite the costs, right? I still think it makes sense in certain scenarios. And so just do your research, know what products are out there, and try to understand that there's a lot more tools now than there ever have, right? There ever have been. So that's what's exciting to me.
It is very exciting. I see Kristin just dropped her next gen home buyer report in the chat. People go check that out too. A couple cool links we put out there for you today. I'm going to put one more before we go here. Our big, awesome sponsors from formfree.com. Everybody go check out formfree.com. Thank you very much for tuning in. We appreciate it. Nick, I knew when I had you on my podcast that I wanted to have you on this show. You were a great guest. I really, really appreciate it. Thank you, sir.
Absolutely. Thank you, guys. Thanks for having me.
Thank you so much. Great.
Bye, everybody.
Everybody.
See ya.